It's interesting with Tria, we refer to as the equity piece as our core portfolio. And that's the type of portfolio that most clients hear about when they talk to a wealth advisor. I think unfortunately that's the limitation of most wealth advisors' expertise or planning methodology. And I've been doing this a long time, and I would suggest over the past 35, 40 years, I've probably reviewed performance of over 30,000 equity or bond portfolio managers, what we refer to as core. And certainly in any given year or a short period of time, the performance of the top person versus the bottom could be pretty divergent. But I would attribute that primarily to timing, frankly to a great degree luck. But if you look at these performances over, say, a 5-year or 10-year period of time, you find there, you discover that realistically the difference between the top performer and the bottom is fairly nominal. So although we know core is critical and we want our clients to have exposure to the stock markets via that portfolio, we're not overly concerned about promoting our unique management style. Now we have one, and it's probably copied by a lot of other people. We find that the most efficient way to deliver that core portfolio performance is via ETFs, exchange-traded funds. They give us the flexibility to go in and out of the market frequently, although we don't trade frequently, but we have the capacity to do that. And the cost of operating those funds is very minimal. What we do to protect our portfolio on a longer-term basis is we utilize option trades. And we know that option trades can be a very effective hedge, so that when the market takes a dip like it did recently of 10 or 11%, the option trade that we have protecting our portfolio will probably mitigate 2 or 3% of that 10% decline. And similarly, when we've got very volatile markets, and we've really been dealing with volatile markets for the past year and a half, 2 years, and we anticipate things are going to remain fairly volatile, certainly through the presidential election and probably for the next year or two after. Option trades also give you an opportunity to take advantage of some of that volatility. So when you see very historically stable companies like an IBM or a Disney move through a particular trading range, you can take advantage of that by purchasing options that allow you or enable you to acquire the fund at a different point in time in the future.